It's been a couple months since I made a video regarding foreclosures in the United States. I want to share two new reports regarding foreclosures and mortgage delinquencies. I'm also going to be sharing some other things that are on my mind regarding some challenges that potentially may be ahead regarding foreclosures in the future. So this first report I want to cover is actually from ICE, which used to be Black Knight, a website I've been talking about on the channel for quite some time. Anyways, they look at April 2024's numbers. So national delinquency rate, these are people who are late on paying their mortgages, fell to 3.09% in April, its second lowest level on record, behind only March 2023's record low of 2.92%. So overall, there's a lack of people who are late on paying their payments. Serious delinquencies, these are people who are at least 90 days or more past due. These are folks that are at the greatest risk of becoming a foreclosure. That actually improved as well, decreasing to the lowest level since August of 2005. Pretty wild. Also, the number of borrowers, one single payment late, dropped by 30,000 to hit an 8-month low, while 60-day delinquencies fell 6,000 to their lowest levels in 10 months. So overall, the national rate decreased to 3.09%, the second lowest level on record. We're seeing 90 days plus late also improving to the best level since August 2005. Also, we're seeing low levels of people who have just one single payment late, decreasing to an 8-month low, and 60 days decreasing to the lowest levels in 10 months. So here's a chart that ICE also put together as well. So again, the overall rate, 3.09%. That's a decrease of 3% compared to March. And also we're down by nearly 7% from 12 months ago. And by the way, if you guys notice this section here on the right, this is a 12-month trend. This is this month right here, and this is the previous 12 months. So the high point over the past 12 months was right here. The low point was this month, which is April. So again, the lowest levels right now, at least the past 12 months. And according to ICE, the second lowest on record regarding the overall loan delinquency rate. These are for mortgages. Total US foreclosure starts was at 26,000. That's down by 0.8% from 1 month ago, but increasing by 4% year over year. US foreclosure sales was only 5,900. That increased by 1.55%. But even though we did see a small gain of about 1.5% from a month ago, it's roughly half that compared to pre-COVID norms. In addition, the number of properties that are at least 90 days or more past due, but not in foreclosure, there's 417,000. That's a decrease of 17,000 from last month, and also down by 84,000 year over year. Also at 417,000, that's the lowest level since August of 2005. The number of properties that are 30 days or more past due, or they are in foreclosure, there's 1.9 million properties. That's down compared to last month and down greatly from 1 year ago. That's at least a 12-month low as well, which you see right here, down from the peak that was set just a few months ago. ICE, or Black Knight, also provided this as well. These are the states that have the highest rates of late payments. So Mississippi leads the nation. These are kind of the usual suspects here. We haven't seen a whole lot of changes over the past several months. So Mississippi leading the nation at 7.5%, well above the 3.09% on national level. That's down by 1.7% year over year though, and also down greatly compared to the peak that was set back in October of 2005, which that actually was when we had Hurricane Katrina, as well as Louisiana. So it makes sense that we have, the peak of late payments when we had right after the onset of Hurricane Katrina, which I believe happened in August of 2005. Feel free to fact check me, but I believe that's accurate. So it makes sense that the peak was, several months later. After Louisiana was Alabama, West Virginia, and then Arkansas at 4.8%. What I also found to be interesting as well is that all these figures, even though they're the worst of the 50 states, they're not too far off their low points. So I mean, look at Arkansas at 4.8%, not too far higher than the 3.7% we saw back in March of 2000. And again, not a whole lot of movement regarding the low point, but coming down greatly compared to the peaks that we saw in 2005, 2010, and 2012. So those are the states that have the highest rates of late payments. Let's take a look at the bottom states. So at the bottom here, which means the lowest amount of late payments, was Colorado at 1.8%. Then we have Washington State, Idaho, Montana, and then Oregon. Also, they're well below the peaks that was set back in 2010 and 2012. So for example, in Colorado, 1.8%. In February of 2010, the peak was at 8.64%, basically 8 times higher compared to the rate today. We also have record lows in Oregon and Montana. Oregon, 2.02%. That's a new all-time record low. Same for Montana at 1.94%, also a new record low as well. Idaho is very close to the record at 1.7. Washington, also very close as well. And same goes for Colorado, actually tied for the record high that was set back in March of 2023. IC also shared this as well. These are top 5 states that have the highest rates of people who are at least 90 days or more past due. So leading the nation again is Mississippi, 1.92%. Then we have Louisiana, Alabama, Arkansas, and Georgia. And again, all these figures are well below the peak that was set back in 2005, 2010, and also February of 2021 in Arkansas. And also not too far off the record lows that was set back in 2000 for Arkansas, Louisiana, and Mississippi, but all-time record lows though for Alabama and Georgia at 1.1%. Okay, changing gears slightly here to talk about foreclosure activities for the month of May. This is according to ATTOM or ATOM, just posted on June 11th this year. So it says here there was a total of about 33,000 US properties with foreclosure filings. These are default notices, scheduled foreclosure auctions, or bank repos. That increased by 3% from a month ago, but still down 7% from 12 months ago. The states with the highest foreclosure rates were New Jersey, where only 1 in every 1,939 housing units had a foreclosure filing. So the rate there, very, very low. After that was Illinois, Delaware, Connecticut, and Florida. Among the 224 metro areas that had a population of at least 200,000 people, the highest foreclosure rates was Longview, Texas. After that, we have Trenton, New Jersey, Atlantic City, New Jersey, Lakeland, Florida, and then we have Bakersfield, California. Also, the areas that have a population of at least 1 million people, the highest rates were Chicago, followed by Philadelphia, Riverside, California, Jacksonville, Florida, and Las Vegas. Lenders also started the foreclosure process of approximately 22,385 properties in May this year. That's a small gain of 3% from last month, but still down 4% year over year. Those metro areas that have a population of at least 1 million people with the highest number of foreclosure starts. So basically, a foreclosure start is the beginning phase of the foreclosure of a property. The homeowner is late on their payments by probably a lot, and the lender started the foreclosure process on that homeowner. So the metro areas that do have the highest rates of foreclosures is New York at 1,447 foreclosure starts. Then we have Chicago, Houston, Miami, and Philadelphia. Lenders also repossessed approximately 2,900 US properties through an REO or a real estate owned property in May. That's down 1% from last month and down a whopping 28% from last year. So as you guys can see here, relatively speaking, for April and also for May, relatively low levels of foreclosures nationwide. The reason for that is due to an increase in prices, right? Prices have increased by about 40% since 2019. And also, based on this report from CoreLogic, just posted on June 7th, homeowner equity, this is for the first quarter of this year, shows that US homeowners with mortgages, roughly about 62% of properties, have seen their equity increase by a total of $1.5 trillion in the first quarter of 2023, a gain of 9.6% year over year. Actually, I think this is a typo. It's supposed to be the first quarter of 2024. It's a typo. As you can see right here, a gain of 9.6%, up $1.5 trillion in the first quarter 2024. It's funny anyways. A bad typo there. Anyways, in the first quarter of 2024, the total number of mortgage properties with negative equity, this means you have a loan that's higher than what your property is worth. So if you have a property that's worth $500,000 and your loan is $550,000, you have negative equity. You're underwater on your payment or your mortgage. So negative equity decreased by 2.1% in the fourth quarter of 2023. And on a year-over-year basis, negative equity decreased by 16.1%. So in other words, negative equity in the first quarter this year fell by 2.1% compared to the previous quarter and down by 16.1% year over year. Now, speaking of equity gains, California saw the biggest increases nationwide with the biggest equity gain in the country at $64,000. The Los Angeles metro area netting $72,000 year over year. In fact, for the nation as a whole, for the first quarter this year, the average US homeowner gained approximately $28,000 in equity in their houses over the past year. California led the nation again. Then we have Massachusetts and New Jersey posting the biggest increases. And also no states saw annual equity losses. So every single state posted gains of equity, but the gains vary quite a bit. So California, $64,000, Nevada up by $35,000. So much of the West increasing big time, whereas Texas, they saw a gain of $1,000. Also in Louisiana, only increasing by $9,000. Also in New Mexico, only increasing by $1,000. Much different compared to the big gains we're seeing in California, Massachusetts, and New Jersey. Now, clearly the stats I'm sharing in today's video point to a lack of foreclosures due to the rise in prices. We have all-time record highs in prices, so therefore it makes sense that equity gains and negative equity is at very low levels. Or I should say equity is at high levels and negative equity is at low levels. Now, here's something though that does concern me. If our economy starts showing some signs of cracking regarding our labor market, if unemployment starts rising further, right now we're at 4%. So if unemployment starts rising, people start losing their jobs, then that could be a recipe for disaster because we have basically all-time record highs for credit card balances and people are not saving the money right now. So here is our good Uncle Fred. This is the amount of credit card balances on a national level. And for April, just posted on June 7th, there's $1 trillion, I should say $1.338 trillion of credit card debt. That is more or less in line with an all-time record high. And to be exact, the all-time record high was set in the previous month back in March. But over the past 2 months, or I should say 3 months, the amount of credit card balances is more or less at all-time record highs. And this data, by the way, goes back to the late 1960s. So of course that is concerning, right? But also this is concerning as well. These are the late payments on credit card loans. So for Q1 of 2024, the most recent stats we have from the Board of Governors from the Fed is at 3.16%. This is actually the highest rate we've had going back to Q4 of 2011. So we have a high rate of loan balances for credit cards, but also a high rate of delinquencies or late payments on those as well. And also what we're seeing as well is a lack of people saving their money. The personal savings rate, 3.6%. Looking at pre-COVID levels back in 2019, the savings rate was over 7%. So it's basically half that compared to 2019. In fact, looking at 2014 through 2019, the savings rate was above 5%. Now it's only 3.6%. So not only do we have high credit card balances, we have late payments on those, but also we're seeing people who are strapped, of course, because they're not saving their money as well. And by the way, if you guys are curious about these spikes right here, these are when people got their stimulus money and also PPP, EIDL, all these stimulus packages that were released that gave people free money. That's why the personal savings rate was at 32% or 32 back in April of 2020. So what are your thoughts about today's video? Do you guys think that we're going to see a foreclosure crisis later this year in 2025? Please leave me your thoughts regarding that. Also, what do you guys think is going to happen with regarding our labor market? Do you think we're going to see more cracks regarding the labor market? Are we going to see more unemployment? And is that going to wreak havoc on our housing market, or is it going to be a nothing burger? Please leave a comment regarding that. Also, if you guys got any value out of today, I just hit my microphone. Also, if you guys got any value out of today's video, then please hit the like button. I greatly appreciate that. Of course, appreciate you. Hope you guys have an awesome day and look forward to seeing you on the next video.